Our next guest says that the markets seem to be enjoying a Goldilocks macro environment and that a soft landing for the economy is at hand. For more on the markets, the economy, and much more, we want to bring in Roger Altman. He's the founder and senior chairman of Evercore. And Roger, we're very near all-time highs. You think the market deserves these valuations?
I do, because we're seeing evidence of the economy starting to slow. You see the first quarter growth was down a bit. Job growth was down a bit. Quits, vacancies a little weaker. Average hourly earnings growth a little weaker. And that should pave the way for downticks on inflation and then allow the Fed a little later to finally turn to ease. I personally think there'll be a rate cut in September. I don't know if there'll be more than that this year, but I think the markets are responding to the positive, to the positivity of this slowing, the prospects for lower inflation, the prospects for monetary ease, and that's why both equities and the fixed income markets have rallied strongly.
I think the big question is how long that process takes for inflation to come down.
Right.
We're going to get other hints this week or other readings with PPI and CPI both out. If those numbers turn out to be hotter than expected, would you take your idea of a rate cut in September off the table?
Probably, because the Fed has to see proof that inflation is improving. And, you know, we have a CPI number this week. Market expects, I think, 3.6% annualized rate, a little better than the last print. But if that were to go the other way, I think markets would react quite negatively because they would see that the prospects for a rate cut are now more distant.
Let's talk a little bit about tariffs, because this is the news this morning. The idea that Biden's looking at raising tariffs, which we knew was coming, for things like EVs and solar panels. I didn't realize that medical items would be on that list, too. And I didn't realize the number that's now being floated out there. Tariffs for EVs, something like 102%, which is significant. That's a fourfold increase from where we stand right now at 25%. That has to be symbolic to some extent, because even at 25%, you're not getting a lot of these cars into the market.
Well, I think what Biden is doing here, assuming that this rolls out as we expect, is trying to protect U.S. manufacturing, which he's obviously focused on reviving, and trying to protect the supply chain, especially as it relates to clean energy products. And also, China is falling back on an old, I would say, tired strategy, which is to heavily subsidize manufacturing, expand manufacturing production way beyond possible Chinese domestic consumption, and flood the United States and flood Europe with heavily subsidized exports. And when it comes to clean energy, where we need our own production, for example, solar panels, I think that's what Biden is trying to push back on.
And the reaction, you think, will be what? From the American manufacturers, from the markets?
Well, there's an ideological debate about tariffs. For example, Donald Trump wants to impose a 10% tariff on all imported goods. That's one of his cardinal approaches. And Trump was a tariff guy during his first term.
Yeah, he was.
So there's a big debate about, you know, how helpful are tariffs really? Because at the margin, they're inflationary. But we're in an era where we're trying to rebuild American manufacturing, and we're trying, for example, with semiconductors, to avoid the obvious Taiwan risk of being totally dependent on TSMC for advanced semiconductors. And you have to have steps like this if you really want to do that.
Roger, the first hot inflation number that we got in January, February, that was like an outlier, seasonal inventories, blah, blah, blah. Then we got another, Were you surprised by what we saw? Or have you had this sort of, I guess, dovish view on inflation all along? And has your view been shaken? I'm just wondering, I'd like to believe you that we're going to see, you know, cooler numbers for inflation, but that means that we've had like a series of outliers. And when does that become, when do you say I was wrong? Maybe inflation is headed back to 4%?
Well, first of all, I'm not certain, Joe. I mean, I could certainly be wrong.
Right, you said if we get a hot number on,
I could certainly be wrong.
Yeah.
But let's step back a minute. This inflation was caused, at least in my view, entirely by the pandemic. I think there's a lot of evidence on that. And So it's taking a long...
That's open to discussion,
It is.
Yeah.
And we could debate that, but that's my own view.
Right.
And it's taking a long time to work its way out of the system. Now we're down to mid threes or mid to high threes on CPI, a little below 3 on core PCE.
Yep.
And so we're heading in the right direction.
Right.
I don't think there's much doubt that if the economy really does slow, like we just discussed,
that's also enough too.
Roger, you spent
Atlanta
some time,
Fed.
You spent some time in the White House last Wednesday, I believe, with the president,
right,
along with a whole bunch of other CEOs.
Right.
What was he telling you about what he thinks the economy is going to look like over the next year, and what were you guys telling him?
Well, the purpose of that meeting was really for Biden to hear from a series of CEOs as to what they're seeing.
Okay.
And it was interesting that a couple of, and I'm not going to mention names, but a couple of really leading CEOs talked about their inability to get enough workers. And in big numbers, I mean, really big numbers. And I think that's really significant at a lot of levels. But
it doesn't suggest a slowing job market, though, or a slowing economy that would come with that.
Well, I mean, the job market is hopefully is not going to slow dramatically, but we all saw the last month's number was lower, and I think it's probably going to get a little lower because it does correlate to growth. But look, in a lot of quadrants of the economy we have, or sectors, we have a labor shortage, and that's a real problem. Listen, Biden obviously is not doing as well in terms of voter attitudes toward the economy as he would like. There are a little less than 6 months to go. In my own view, whether he starts to do better on that measure will depend a lot on inflation, because I think what he's carrying around as a burden is the legacy of this inflation, which Americans really don't like.